Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the Thanksgiving Day special. Today, we're going to be doing a little bit of a Thursday strategy session. We're going to be talking about the 9 EMA strategy, and we're also going to dive into a little bit about what I do with Fibonacci's personally, Fibonacci Counterpunch. We're going to go over that as well, and maybe give some market reads. We've got some news events that aren't good, believe it or not. I mean, even though it's Thanksgiving, it's a big-time holiday here in the United States. Liquidity is low. The markets are closed for all intents and purposes, but that doesn't mean the news cycle stops. And we got some news out of the Russia-Ukraine situation that broke last night that I think is a big deal. It's another major strike from Russia against the Ukraine. They targeted the power grid, knocked out electricity for about 1 million people. So even though you're in a holiday situation in some parts of the world, other parts of the world, business goes on, business as usual. And we're definitely watching the Russia-Ukraine. It's the number one market driver in the world right now. You really do have the election fallout from earlier this month in November. After Trump won the election, the Republicans swept the houses of Congress, and now we're really getting into sort of the tall grass with a potential major escalations in the Russia-Ukraine situation. So all the best to everybody out there. If you're here in the United States and celebrating Thanksgiving, I want to wish you a happy Thanksgiving. Also, before we get started with our strategy session, we've got a few things just to go over here relatively quickly. Big shout out to Connor. We thought that he was going to be able to stream tomorrow, but we've had some technical issues, some different things that have to take place. So he will not be streaming tomorrow, and today was his last stream. So, I know that everybody else is already up on that. Most of our audience here is from Europe, so you probably watched Connor live as he sort of went through everything. But he's taken off for tomorrow. And that's going to be about it. So I'll have just a behind-the-scenes look. I'll have a quick meeting with him and the rest of our team in the morning, and wish him all the best. So worked with Connor over 2 years, and it really does seem like just yesterday, when Nick Quinn was here, Nick and I sort of sat around and we were taking interviews and interviewing people to fill into that analyst role. And we both interviewed Connor. I thought he was a pretty good fit. Nick thought he was a pretty good fit, so we brought him in. And now it's 2 years later, and it's on down the road. So if you've been a longtime member of the How to Trade team or the Forex Signals team, I realize there's been a tremendous amount of turnover. For right now, it's just like what Dibble said here in the live chat, the Lone Ranger. Yeah, it's just going to be me for a while. We're going to see exactly how that goes. I think we're going to be all right. We're going to do a little bit of probably tinkering around with the broadcast schedule here. I typically like to do it about this time here in the States, but I know for the European audience and some of the folks overseas, that can be a bit of a challenge. So we're going to try to figure something out that works for everybody. If you have any suggestions, be sure to send me a private message here in the How to Trade trading room. And if you're watching on YouTube, Deepashnu Sharma, good to see you. If you want to cruise by the How to Trade trading room, go ahead, open up an account. You can go ahead and reach out to me via private message and ask me anything you want. All right, everybody, good to see you back here in the trading room. Let's get rolling. Bobby Bob, good to see you. Arta, good to see you. JC, all right, pleasure, always a pleasure. Dibble. This was, one of the things that you always want to do on a holiday session is, number one, we're going to do strategies, of course, but number two, if you're going to trade, you got to understand what liquidity is, and you got to understand that if there isn't the market depth there, and if there isn't enough participation to move markets and make it a real fluid process, meaning you can't really have empty pricing chains. Your market depth at each price point needs to be significant, and the reason why is we're retail traders. Things like slippage and things like spreads will absolutely destroy you on sessions like this. So I'm very, very careful as to putting out any trade ideas on a day like today. We do have a key level for silver that I'm going to go over here in just a little bit. That's going to be released probably right after this stream. That thing's all written up, ready to go. We got a key level there. But right now, Bitcoin's alive and well. Now, there has been a little bit of movement in the markets right here. Natural gas spiked about 3%. We're going to look at that in just a second as well. And Bitcoin's off about 1%. But what I really want to stress here is we made a YouTube video a while back called Key Levels. Pretty much nobody saw it, but it talks about the importance of big round numbers, of psychological levels. And right there, 100,000 is about as big of a psychological level as you could ever have in Bitcoin. If you think about it, think about all the big levels. First it was 25,000, then 50, then 75, and now 100. Well, take a look at what happened this week. The high right up there was 99.8. So you saw a combination of profit-taking and sellers in the derivatives market really protect 100,000 in Bitcoin. And right now we're getting that compression right in front of a big round number, a big key number that you really sort of look at and say, wow, we could have a tremendous opportunity potentially to buy it. Now, we sort of outlined the cup with handle yesterday on the daily time frame. There's also, we could probably say that this is an ascending triangle, even though it's not the best one. And the way that I would pretty much break that down for you is just trying to draw some trend lines. What do you have right there? It's sort of a trend line right there. You can move it down here as well. And then take a look. You've also got sort of a rising, I would call it a bullish pennant. Even though it's not the prettiest thing in the world, it really isn't. It does sort of show you that this channel is significant. Now, we're going to cut the bottom of that off because that's a more accurate look at your channel. But take a look at what happened. We broke through essentially that lower trend line and then rebounded. This is an incredibly bullish market. So if I want to trade Bitcoin, I want to buy it, but I can't really buy it from 95,000 on faith because we could easily rotate back down to the mid 80s or something. But right here, I'm looking at this bullish move, nice big long-term bullish trend, and now we've sort of gone sideways. And right up in here, you saw the sellers, and we're still compressed. I would say between 95 and 99.8. That area is going to be extremely hot. So what I would be looking to do here, as we roll forward in time, there's going to be compression, and then we'll wait for the break, and then we'll buy a retracement after we break 100,000. 100,000 is the biggest level in the world right now for Bitcoin, no question about it, and it's obvious. So think about what we're doing here. We're just trying to find out what kind of technical outlook's going to give us an advantage, and the only way we can establish that advantage is if we understand the technicals, okay, the specs, we understand the trend. The trend is clearly bullish. We know that we've got a big key level up there, 100,000, psychological level, absolutely huge. What's likely to happen once 100,000's gone? We rally. So I'm still incredibly bullish here. You'd love to get a big, deep pullback here. I just don't know that we're going to get it. Right now, it seems like all the fundamentals pointed at crypto are bullish. You see right there, that's an example of the Fibonaccis we're going to break down for you in a second. If I got a chance to buy maybe 87.5s again, you could probably make the case that that's a fantastic buy. I just don't think we're going to get it. So right now, I'm in a holding pattern when it comes to Bitcoin. It's really difficult to buy right here because this market is getting a little bit toppy. If something develops and you see a major hacking event or you see a policy shift maybe, or so Trump says something about maybe the SEC chair, maybe something that's negative against crypto, this market will come back down to earth. But for right now, boy, it's incredibly bullish, and most analysts believe that 100,000 is just a matter of time. I've read more guys, ladies and gentlemen out there talking about 250,000 as being a legitimate, intermediate term top, and that's an incredible gain from where we're at now. I have no idea how high Bitcoin goes, but it is being traded today. There's pretty good volume there. So if you were interested in potentially trading an intraday, on a U.S. holiday, you'd be looking at something like that on a 30-minute chart. And I can tell you that I would avoid this. This is relatively difficult to get any money out of at all. Look how choppy that is and very, very tight. So be careful if you're trading Bitcoin. Be careful if you're trading anything today. All right, we did have a big time, really a news cycle that's not good. And I'm not going to bum everybody out on a holiday. Just one day you'd like to go without seeing some of these headlines that all really do point to war escalation and what many of us think is going to be an incredibly tense December. Incredibly tense. This happened last week. Undersea cable cuts in the Baltic Sea are stoking geopolitical tensions, and they sort of decided to break this thing down again for us today. Probably the writer didn't have anything else to write about, so got in there and rehashed this story. But what you see here is the basic situation. 2 undersea cables in the Baltic Sea were severed last week, one connecting Finland and Germany and the other linking Sweden and Lithuania. Now, this is big because you're talking about subsea cables. This is the big important thing I would take away from that article. Massive fiber optic cables laid on the seabed are the backbone of the global internet, carrying 99% of the world's intercontinental data traffic. So if, in fact, this sort of becomes, if this starts happening more and more, if you cut a transatlantic cable between the United States and Europe, that's really going to slow down your traffic. It's going to do a lot to really impede the flow of information. So a lot of folks believe that that's an escalation. A lot of folks are blaming this Chinese freighter. I have no idea what happened, but it does look like sabotage. Those things don't just get cut because somebody drops an anchor on accident. And then lastly, this developed during the U.S. overnight, and I was very diligent to check out the news cycle first thing this morning. And it was pretty early, about 5 or 6 hours ago when I was up, but overnight attack. The overnight attack here from Russia really just knocked the power out in the Ukraine and several regions, and you're looking at about a million attack power cuts to about 1 million homes in Ukraine, and it's getting to be the wintertime season there. So when we start talking about, okay, what could that possibly do to our markets? Well, this is it. Natural gas, very thin day. Your U.S. futures are sort of offline. You're not really seeing that participation. But this CFD product right there, you're up about 3%. Natural gas has been incredibly volatile. I would have to say that I'm bullish natural gas. If, in fact, we get an opportunity to bid a pullback, I don't really think you can go wrong doing that. From a weekly perspective, something like that would be absolutely fantastic. We talked about that 2.96 level relatively well. I'm pretty aggressive with it. I think that if we get a chance to bid down there, we're going to be in pretty darn good shape. Now, remember, the long-term level that I would say a lot of institutions have marked on their map, and a lot of folks, just traders like you and me, have marked on their map, is this one right here. Now, I know it's not a very big gap, but that natural gas market did gap down to open the year, open January 2023. And there's the old rule when it comes to commodities especially. Gaps get filled, gaps get filled, gaps get filled, and gaps get filled. Very rarely do you see a gap not get filled. And we've covered a lot of gaps over the years in the stock market. But you definitely, when it comes to commodities, that's really the basis of your market profile in things like your TPO stuff. You're really just looking for value areas. We're not going to get that because we got no volume really. But what we're going to be looking at is an area that was neglected. That means that there was no buyer and seller there to really truly make the market. Even though that was over almost 2 years ago, it's in people's minds. I think that's going to be your top side target here. If you wanted to take sort of the macro range with a Fibonacci, you could go right there from really the crisis highs on that initial invasion of the Ukraine by Russia, and you can see that's still well beneath your 38% level. We haven't even challenged this uptrend, haven't even challenged it, just sort of been wandering sideways in sort of the ether. I think that we go up and we fill that in, and I think it happens relatively soon. If you see another major escalation, we're only talking about, another buck, something like that. You could easily get that. So I'm watching December closely. We're pricing wintertime natural gas. That's absolutely huge. That's a bullish market driver. The heating demand, all those things are all play into really a bullish outlook for gas. So geopolitical tensions, 1, seasonality, 2. It's really hard not to buy natural gas right now. We just have to make sure we get a good entry point, and that weekly chart sort of gives us an opportunity there, I think, to get long with a little bit of confidence and a little bit of meaning. All right, let's go ahead and get our strategy session going. I know that took about 10 minutes, but we had to cover a few things here before we get rocking with our strategy stuff. This first strategy we're going to talk about here is going to be the 9 EMA. Now, remember, if you want to trade any of these strategies, go ahead, check out switchmarkets.com. We've got all sorts of stuff. We've got our Black Friday deal going right now, and this is our partner broker here. So if you're in the European, if you're in Europe, or if you're in a sort of a locale that is serviced by Switch, definitely check this out. You get the Black Friday special that goes through tomorrow. Go to the website, check it out. A lot going on there. You get a chance to win an iPhone. You also get your 100% credit bonus, and that's big when it comes to liquidity. Okay, the first strategy that we're going to cover is the 9 EMA. The 9 EMA strategy in under, under 10 minutes to learn the 9 EMA's intraday strategy. So what I basically did with this video is we outlined a very simple way of trading the EMA. So if you're interested in just taking a look at a base case, okay, I want to be able to trade the EMA as simply as possible, check the video out, because we don't talk about confirmation there. We just talk about getting in and taking trades. That's what we talk about. And is that the best way to trade the EMA? No, it's not. In my opinion, you've got to be able to use some confirmation. You can trade pullbacks to the EMA and really get you into that macro trend. But I'm going to give you just a quick and dirty look at 2 trades we've got going using this 9 EMA with RSI confirmation. And I'm going to show you exactly sort of what the positions are doing, which not much today, but I'm going to show you why the trades were made. And if in fact you potentially could be looking to use these time frames, and they're on 2 major Forex pairs. So we're going to take a look at them. Dre Day, happy Thanksgiving, Shane. Have a wonderful celebration. You too, Dre Day. Thanksgiving is always one of my favorite holidays here in the United States. We're working today, though. Both the wife and I am working, but the turkey's going in the oven here in about another 30 minutes. So as soon as I get off of this, I'm going to go out to the kitchen and see how things are progressing. But, yeah, I'll probably look like I'm 400 or 500 pounds tomorrow just because I like me some turkey and some stuffing and potatoes and all of it. So I'm going to be sure to have a little and maybe even watch some football a little bit later on today, sort of traditions around our house. All right, this is a good look at what I would say is a very simple setup, very simple. 9 EMA, there's our red, 9 EMA right there. We based it on the close of the candles. The reason why we did that, so that's just the factory settings. Now, feel free to mess around with your settings there. I always say that these strategies are a jumping off point. All right. So what you could do with something like this is you could try to find a time frame that you like, that's affordable, that you can manage, that you can hack. And then the other thing is just to make sure that potentially you've got some way to be consistent. So if you want to use the 9 EMA based on the close, go for it. The closing value, go for it. No problem with that. I like the mid. We're going to use the close because that's what was used in the video. You could also use the open. I'm not real big on opens, but a lot of people love the open. For me, I like the mid. I think that's a better setting, but that's just me. Now, remember, the 9 EMA strategy, the 9 EMA prices more recent pricing data more aggressively. It means it gives it weight. And when you put more weight on the recent pricing data, that means we're fast. We're looking to be fast here. Now, this is a daily chart. All right, this is a daily chart. Now, I've sort of said it realistically for the last 3 years I've been on here. Longer time frames give you a better chance at success. There's no question about it in my mind. I've been doing this since 2011. The best successes that I've had and my biggest levels, boy, I love my monthly retracement levels are fantastic. My weeklies and my dailies, love those. But we also have to be able to trade intraday, and I understand that. But for a 4X pair that's showing really tight ranges, this isn't a bad trade. This isn't a bad trade at all. So in any case, what do we have on right now? We've got a long. Why do we have a long? We were in oversold territory down here beneath the 30 on the RSI. I believe we sort of bottomed out somewhere right around 26.85. Remember, we get beneath that 30 zone. That means we're in oversold territory. Price is sort of, we expect it to become exhausted. Now, our trigger and what gets us into the market is a breakout above that 9 EMA. As soon as you get that close above the 9 EMA, that's our trigger. So right there, we set the table for it. We were in oversold territory. I want to buy the market, and what it gets us into that, a bullish close above our 9 EMA, and there you have it. So if you were going to make this trade, and we just put this down a little while ago, you've got the reason. You can buy it. You've got your entry right there. Where would your stop loss have to be? You've got a couple of options. It's not, it's really not too bad either. That doji right there, that's not a bad area for your stop loss. Your low right there is 104.24. What's your entry point? 105.50-ish, somewhere in there. Now, that's a significant number of pips. So you've got to make a decision. You're either going to dial down the leverage and try to get in on a runner, maybe make this a swing trade or maybe even a sort of a position trade for a few weeks. You can certainly do that. Or you could use a higher leverage and you're going to have to use a tighter stop loss just to service your account. 1 to 3% is sort of what we've been preaching, what I've been preaching forever to new retail traders, just so you don't get into trouble and you can make a lot of trades and you really can be in the market for an extended period without blowing your account out. If you wanted to make trades from 3 to 5%, I'll allow it. Just be consistent with what you do. I mean, most futures traders are trading much more than 5% of their account. They really are, especially if they're retail. So we got the question the other day. I think T. Marina asked it. She said, "Hey Shane, what's your biggest daily loss?" Couple of grand. What percentage of my account was that? It was a culmination of about 3 negative trades. So you start looking at how much money was actually in the account. I mean, the daily loss was better than 3%. I could tell you that. So I would recommend daily loss limits are a beautiful thing. Position loss limits are a beautiful thing. Be sure that you do that. Be sure that you use risk management that's sort of akin to what you have. Now, so right here, what do we have right there? We've got a low. We've got a little swing low. I like that as my stop loss. So if I was going to make this trade based on these parameters, and I'm looking at 141.75-ish, and what do we buy in here? Or 104.17, and we bought in somewhere up here right around 105.51. That's our buy. You can see right there that we're in this thing about 130 pips. It's a big move. It really is. So if I'm going to do that, and I'm going to make a trade based on a daily chart, I've got to score, and I've got to be looking toward the top of market structure or even to this nearest order block, which is right over here. Now, I don't really have any problem doing that. That's still a winning trade for us. We've just got to see 107.68 from 105.51. What is that? About 200 pips. So we're risking, about 140 pips to make 200 pips? That's a true swing trade and a true position trade. No doubt about it. Is it a good trade? Well, I think our 9 EMA on the daily with confirmation, that gives us a pretty good chance. Now, of course, most of the traders that I talk to in the room, and I got this question yesterday about the 9 EMA on a 1-minute chart. And I said, listen, you can certainly do it. And really the mechanics are the same. Just remember that if you take on a day like today, a 4X pair, a 1-minute chart on a 4X pair, I don't hate it. It's just everything is a lot smaller. And there's nothing wrong with it. I mean, there's nothing wrong with it. Just understand that your risk versus rewards are going to be tighter. Your stop losses are going to be tighter, and you're going to be taking a heck of a lot more trades, excuse me. So when you take a lot more trades, you've got to establish a consistent risk management plan. You have to make sure that your slippage is as low as possible and your spreads are as good as they can be. If you're going to be in that mode, if that's what you want to do with a Forex pair, you've got to make sure you're trading when there's maximum liquidity. And for something like the Euro USD, you're going to need to trade during that London US overlap. I would suggest that those 3 or 4 hours right there after the U.S. Open till the London close and shortly after it, that's when you would target a Forex pair because that's when the most people are trading. Now, it's going to be a little bit different. Let's say you're trading yen or you're trading pound yen, then you're probably going to want to look more towards that Tokyo session. But for something like the Euro USD, and you're going to trade a 1-minute chart, maximum liquidity is what you need. So on a day like today, this would be a complete non-starter. You can't really do it. Look at our spread. 105.54.6 to 105.53.8, something like that. You know, the market's not even moving. This would be a really difficult thing to make successful in a holiday session. More than likely, you're going to get into trouble. However, you see right there, we were in oversold territory. That marks our oversold. Where would we have been short? I always say make it obvious. That close right there, what's your close? Close right there is 105.55. What is it? 105. It's too close. You need something obvious. So now, if you were going to go short right there, which would have been the next 1-minute bar, and that's the big close, you sort of missed the move. But let's say you wanted to go short right there. The idea is being we were in overbought territory, 1-minute chart. I'm sort of in prime time. We're in pretty good shape here. We got a little bit of movement. Stop loss would be up there. Where's your profit target going to have to be? If you're trading, if you're trading EMAs and really trying to get in on those big moves, I would be looking at market structure down here. So my profit target would be down there, 105.50-ish, something like that. And then also if we're like right there at 105.54, you can see what I'm going to get at, right? It's extremely tight. You're only talking about a couple of pips. And just because we blow the chart up doesn't mean that this range is really worth trading. You'll find that the market breaks down. So I'll meet you in the middle if you want to trade these things on an intraday basis. 4 hours not bad. The biggest challenge you'll have with a 4-hour chart is where in fact you can get into overbought or oversold territory. You'll notice right there you're in oversold territory, and that was sort of a liquidity sweep video. We're going to put that out tomorrow. That's going to be coming out tomorrow. And I really broke down this liquidity sweep, what it was, and then exactly what the institutions did. And you can see right there, bang, bang, there would have been your gap up bid, and you'd be up a few bucks. Your bid would have been right in here, right around 104. Let me see, 104.68, and you could have got up there to 105.70. So not a bad trade at all. I love the dailies and the 4 hours. If you start getting down into the 1-minute charts on a Forex pair, you could be in big trouble. Now, I'm not going to say you can't do it. I'm just going to say I would look, if you're going to trade that, look for a futures contract or something. Maybe the US 100, something with tight spreads that gives you an opportunity to capitalize on volatility. So that's the first trade. Let me see. We got some stuff going on here. Yeah, Drade, absolutely. I get it. I like being productive even on off days. Yeah, I got to do something today. The gym's closed, so I got a few weights out in my garage. I'm going to go out there and pound the weights here after I get the turkey in. Let's see, Hamza, best of luck, and thank you. Thank you to Woods for being an amazing tutor. Yeah, I mean, Connor's going to be missed. I know that many of you in the room really enjoy his streams and enjoy his input. He has an interesting take on the markets. It's a lot different than what I do, but the smart money concepts and things are tremendously popular. Yeah, he will be missed. So I hear you, and I know that he really likes all the compliments that you guys give him. Let me see, Aladdin. I'm sorry, I can't. I don't read Arabic. I don't know how to read Arabic, but if you could translate your comment, that would be fantastic. Watching over on Facebook, great. And Fatty, good to see you, Fatty. Welcome. All right, guys. So that was the first trade that I wanted to look at here. The second one's this USD CHF. Now, interesting trade. We sort of put this one down just a little while ago. But pretty interesting stuff. Now, once again, this is a daily chart. Right there, you got that nice big spike up here. Put us into really overbought territory. We want to look to sell the market. So where would our signal have been? Right there, there's just sort of your trigger. So you're saying, okay, as soon as we cross over, get a close beneath that 9 EMA, then we're going to short down there. And that's essentially what happened here. You notice we got almost into overbought territory again, but this one would still supersede and make sure that you're still looking to short the market. The idea is that the market's overextended and we're waiting for that 9, waiting for price to cross over our 9 and get short again. So right there, where's your break, and it would have been right in here. Now I got a great question the other day about, okay, do I have to sell, or excuse me, do I have to enter, do I have to buy or sell right on that candle close? Is that what the thing says to do? Is that what the strategy's for? And I'd say, theoretically, yes, but I'm always willing to entertain ideas that'll give me a better entry point. Now, the way that we've been trading this, if our stop loss is up here, if I can get this going. Okay, that's our stop loss. Is there anything wrong with selling right here? No. Is there anything wrong with waiting for a pullback to our 9 EMA before selling? No, not really. The biggest thing you got to do is just be consistent. So if you're going to sometimes sell down here on the close and then let these things ride, or sometimes you're going to wait for this thing to pull back to your 9 EMA, you're going to have a problem being consistent. So I highly recommend just pick something and do it like your moving averages. If you pick one of these strategies, you start tailoring it to what you want to do, and you build it out in a fashion that you see fit. They're all supposed to be starting points. In any case, right there, that would be essentially what you're looking for. What would I be looking for out of a profit target potentially? Well, if you're a smart money concept trader and you like order blocks and potentially targeting the next demand zone, you got a couple of options. You could shoot for this down here. Once again, a position trade. I mean, you got to come off about 160 pips. That could be a challenge with the Swissy. Doesn't always like to move. Or you could be looking at that order block right there. Maybe that changes structure right in that zone. So you got options. The biggest thing I would make sure that it's at least a 1-to-1 risk-reward ratio. Probably don't want to risk all that money. If your entry point's right here, you don't want to risk that just to get that. I think you've got to extend and really look for this other order block down here. Now, by trading in that fashion, you can have an opportunity to get in on big moves. And that's what moving average trading is all about. It's about getting in on trends. And the way that we do that is we try to figure out when the market's overextended, and then we enter according to that overextension. RSI tells us when we're overbought and oversold, and then we look to get in on the market movement itself, and really try to get in on a big trend. A lot of people make a lot of money moving average trading. What it takes patience, and you have to know what you're doing with your stop losses and your profit targets. That needs to be based on market structure. You can certainly do it in arbitrary 1-to-1, 1-to-2, 1-to-3. I don't have any problem with that. I do 1-to-1s. I said that in the video. I like my success rate to be much higher. You just got to make sure that you understand exactly how to dial in these time frames. For the Forex, dailies are great. I'll compromise with anybody and just say, hey, a 4 hour is pretty good as well. 4 hour gives you real nice structure, really an opportunity potentially to get in on the market. So right there, you'll see we sort of moved our RSI. That's another way of doing it. You can move that thing up into your other panel if in fact you want. For me, I like seeing it down there as more of a histogram. But the rules remain the same. You got to get up over 70 to be overbought and below 30 to be oversold. And right now, this 4 hour, we were looking potentially maybe we were in overbought there. So you could be rocking a short there on a 4 hour time frame. You probably would be a long on a daily time frame. 4 hours pretty good. Daily's pretty good as well. All right, everybody, let's go ahead and talk briefly about the other strategy here. We're going to have to save this for another time unless I'm going to go way long. But just real briefly. The Fibonacci counterpunch strategy is one that I built a few years ago, and it's on the website. It's underneath the elite trading series. Get in there and check it out. It's right after our other strategy videos. You should be able to find it. Just click around a little bit. And I believe it's module 4 there, and it's a series of about 5 videos where I go through how I trade the Fibonaccis, and it's different than how most people do. It is. A couple of rules. What we want to do is capitalize on retracements in price. Key levels 38, 62, and 78. Those are my keys. I don't trade 23.6. 50%, I need a moving average or something there to give that area more validity. My objectives, I'm not calling a market top or a bottom. I'm identifying market state to tell when it's trending and when it's flat. I'm quantifying a useful range, meaning either a daily range, a spike-to-spike range, or a time-based range. I'm going to talk about that in a second. And then we're dialing in our scalping, day trading, and intraday swing trading entries. Very basic. It's not hard. Right there, what do you got? Market state. Now, very basic stuff, guys. When a trend is valid, when price is above or below the 38% level, okay, it's a strong trend at that point. Now, the trend still remains technically valid when it's above or below 62%. And then also 78% is my line in the sand. If we cross 78%, there's a real good chance that you're going to see a break in market structure, and you're going to see something really aggressive towards our swing highs or swing lows. So what does all that mean? It means that all we're doing is trying to identify ranges. The spike low is a very simple formation. It occurs, it's a 3-candle formation. It occurs when price takes out the bottom, goes beneath the previous candle, and it also remains beneath the subsequent candle. That's a spike low. A spike high is the opposite. That's when the second candle of the pattern is above the previous high and also above the subsequent high. 3-candle patterns, relatively basic stuff. The idea is we're trying to really target market structure and build ourselves a set of levels that are worth playing. So when I do this stuff, I try to stay current with my spike to spike. Now, my time zones, I don't really mind going back to a monthly. I can scout monthly levels. And in fact, I like to do just that. The real question is when we go on the intraday, what time frames to use. We'll talk about that in a second. Right there, spike low. This is a monthly chart on silver that we're going to put out. We're going to go ahead and do it. But right there, what do you got? Right there, spike low, spike high. Look at our silver formation. Hit 62% beautifully. What does that mean? It means this 3-month uptrend is still valid. It's just not nearly as strong as it once was. That was a great support zone. Be ready for this level to get wiped out. And once it gets wiped out, I think it goes down to the line in the sand. It's probably that's probably going to develop in December after we really switch the calendar over from November. I think you're easily going to see a washout beneath last month's low and potentially get a test of 2830. So that's a real basic look at Fibonacci, counterpunch, and how exactly I apply them to charts. We're going to do a few things here. The intraday stuff's probably not going to work because we got no volatility today, but I'll pull a chart anyway. Let me see. Bobby Bob. Shane, kindly take us through how to go long with Fibonacci retracements. I lose a lot when scalping with Fib. Yeah, I mean, if you're losing using the strategy, then got to find something else. You got to find something else that makes true to you. But like going long, this would be easy. This would be relatively easy, Bobby. You'd have a spike low there, spike high right there. Those are going to be your support levels. So we did scalp from up here. You sort of saw a big washout of that zone right after the election. But this one right down in here, we really have called the bottom of this, at least thus far. We've got a pretty darn good, we put that trade ID out last week. We might revisit that one tomorrow and break it down for you. But that right there would have been your bid. So if you're going to bid from this level, you've got a couple opportunities. Number one, you can wait for the level itself, the exact level. Or number two, you can shade your entry just up above that zone. For me personally, we were shading this one up to 29.75, somewhere in there. And I like to shade those entry points because a lot of times if you wait for the exact technical level, you'll see the market just sort of hem-haw around and sort of flirt with your entry. And then eventually you'll get wiped out. The market will break against you, and you'll find yourself in a real bad scene, real bad situation. So I like to shade those a few pips up above entry. A lot of times if there's a big round number, a quarter handle or something, I like doing that. So the answer, if you're looking to buy these things, you're going to build your Fibonaccis, and then when you get the pullback there, you'll have an opportunity just above those levels to get long. Something to think about there. All right, let's go to our dollar index. This was another one that we were looking at earlier this week. You can see really it's been just a negative week for the dollar index, the first one in a long time, off about 1.25%. And what do you have here? You have just a tremendous bullish, really just a tremendous bullish trend. Bang, bang, bang. And then what do you got? There's your pullback. 50% is right there at 105.72. And then right there is 62% at 105.16. So to answer Bobby's question, if I was going to buy one of these levels, number one, I wouldn't be buying 50%. I don't do that unless maybe my 13-period EMA is nestled up in there. Then I would consider it. But for me, if I was looking for a significant level, I would be looking to buy this area down here. 105.16. Now, if it was 105.16, maybe 105.25 would be my exact entry that I was looking for if I wanted to risk that much. Something like that. 105.25 could potentially be my good entry. So remember, you're identifying the levels and then you're shading your entry. And on a buy, you're going to shade your entry above the level. And the reason why you would do that is so you make sure you get in on that move. And that's one way that you can scalp long-term levels. Now, we don't really have any price action here on the daily, on the intraday charts really to break down for you. So what I'm going to do is I'm going to try to find something. We're going to go to this New Zealand dollar. We saw some moving earlier this week with the RBNZ, and this gives us a good look at a 4-hour time zone and gives us a good look at a 4-hour range that I can tell you right now looks to me to be pretty good. So something like that would be my Fibonacci sequence. What is it? There's your spike low. See that? That lower extreme right there is beneath this candle, and it's beneath this candle's low. So that's your swing low. There's your rally right here, and right up to your swing high. Swing high, that high right there is above the previous candle, and it's above the subsequent candle. And then we're just sort of creeping down. I would be looking for that accumulation trade. If I was looking to bid this thing, 75, somewhere right in there. Big round number, that quarter handle, right up above that zone there. You could bid that, or you could wait for an exact strike to 58.71. So the real question would be, okay, Shane, where would you put your stop loss? You got a couple of options. You could put it beneath the next Fibonacci number here. You could put it right down here, maybe say 58, something like that, 59. Always padded a few pips. Or you could put it beneath the 62%. I like that a lot better. The real question is okay, how big is my trade? Well, if I'm buying 75s and my stop out point's going to be beneath 50, we got to at least get 30 pips to the top side. And the question is can we get that up here? Looks like it. 58.99, something like that. That would give us 25 pips. We may be able to do something like this at 05 as well and just sort of aim for the top of market structure. You can certainly do it in that fashion. All right, everybody. I know that was sort of a whirlwind crash course. We do a lot of Fibonacci's in this room. Just feel free to go check those videos out. Those in the Elite Trading Series. As far as, what we're looking at the rest of the week, I'm going to be on early tomorrow. We're going to do the weekly wrap. We're going to go through and really try to recap what's happened this week. And there's been a lot for a holiday week. But for the rest of today, be very careful. Remember, liquidity is pretty much dead. U.S. stocks are closed, and also commodity futures are closed as well. Early halt. They're not quite closed yet, but the liquidity is gone. The people are gone. Don't make a mistake today. You don't want to lose money today. One last thing I would say, be ready for that Tokyo Open. If you're trading the Asia Pacific session, typically that Tokyo Open, also the return of futures later on today, we've seen some significant moves on Thanksgiving Day afternoon here in the United States. A few years back, we saw a major market sell-off just sort of based on just a supercharged news cycle, and that's exactly what we had in the Russia-Ukraine. All right, everybody. We'll be back tomorrow with some more trade ideas and different things. We'll be monitoring some of these other trades, the Euro-USD trade, the US dollar Swissy trade. But pretty much what we're going to really look towards is some commodities tomorrow. We're going to look at gold. We're going to look at crude oil and see if we can get the table set. No pun intended, but get the table set for this weekend's trade and potentially as we roll into next week. One last thing, be sure to check out our streaming schedule here if you're in the room. Going to be a challenge to try to get you guys covered with just one of me. I don't know if we're going to be doing multiple streams a day with just me or maybe just one. We just got to go through and see exactly what we can do. All right. Thank you, Dibble. I sure appreciate it. Thank you, Bobby Bob. You're absolutely welcome. Thanks again for joining me today. If you're in the States here, have a happy Thanksgiving. Enjoy your turkey. And the markets open up again here relatively soon. So get away from it. Get some time. Enjoy it. Then we'll come back here for Friday's trade. Remember, it's going to be bright and early tomorrow. You're going to be looking at about 8 a.m. my time, so about 3 hours earlier than we usually go. And the reason why is I've got some other business to take care of tomorrow afternoon. So we're going to get in and get the stream done early. That's a wrap, guys. Have a fantastic Thanksgiving. Trade the action well, and we'll talk soon. See you.